Tim, you are concerned over the short term about what these trade talks will mean for Apple. What's your biggest concern?
Well, certainly the street seems to be really concerned about what the tariffs are going to mean to the cost of iPhones and the cost of the parts that go into making an iPhone, and whether the iPhone itself is going to face a tariff coming into the U.S. I think I'm more concerned about what's going on in the Chinese economy, how the tariffs might affect the Chinese economy, and a little bit of Chinese nationalism that I think in the fourth quarter of last year hurt iPhone sales as Chinese customers seem to move to Chinese manufacturers. So less than just the cost of tariffs, which a company with the balance sheet that Apple has, they can handle increased costs. It's much more about demand.
Having said that, you are optimistic over the longer term for Apple. You like this stock. So if there's a pullback in any shares, would you be telling people to buy here?
Absolutely. You're still talking about a company trading at 14.5 times earnings in a market that's up at 17.5 times forward earnings, on the cusp of a 5G secular change in cellular operating systems. So it's pretty hard to want to get out of Apple right before the party's going to start. So we're still pretty bullish long term.
How much of that is because of what you see in technology changes, technology advances, potential for handset sales? How much of that is because how the company itself is changing and services is becoming a bigger part of things?
Well, I think what we're witnessing is perhaps, or hopefully, the first ever successful switch from being a hardware manufacturer to a software manufacturer, which a lot of companies have tried before and have had a bumpy road doing so. I think the street expects that someday Apple is going to end up on the scrap heap like BlackBerry, and I'd make maybe the argument that it'll be more like Microsoft, where they've moved into software as a service and cloud-based services more than just a hardware company.
The stock's trading at 185 right now. Do you have a price target?
As a manager, we don't set price targets because they're moving all the time. We really more look at valuation and cash flow. And I think that's the secret to everything now is we really don't know where this tariff thing's going to go. We don't know where demand's going to be. We can only look at projections of future earnings and make reasonable investments based on that. And at the end of the day, it's earnings that matter.